Ah, yes, the future is bright. The future is bright. Today was a good day to say the least. We did pull off a pretty nice short trade and add a little bit more to our account. So currently, our trading challenge is sitting at 25,453. We added about 200 bucks to the account today. As you can also see, we do not take very many losses in our accounts. Again, let me get out of the way of that loss. We did record this trade. We're going to walk you guys through everything that we were thinking, everything that we were doing as the trade was moving forward. So you'll get a preview into that. We'll also take a look at some altcoins today to see where they are landing in price, because things have been pretty bullish over the past couple of days. But as we know, things are bullish on Monday and Tuesday. You're going to look for that reversal by Wednesday, Thursday, Friday. Take a look at some legacy charts. We'll take a look at Bitcoin futures and dive into where we think price is going to go. All right, so lots to talk about today. Hope you guys are in tune. Salute to the subscribers. Thank you guys for checking us out, and you have found a home. And if you don't know who I am, it's your boy Maestro. Welcome to The Long and Short. Let's go. Welcome to The Long and Short. My name is Maestro. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques from a long and a short-term perspective. Doesn't matter if you're a long-term hodler or short-term trader, we have some tricks up the sleeve to show you. So thank you to all of the new subscribers. If you want to learn how to trade crypto, we're going to show you live examples here and all of the things that we do to win in this market. If you like what you see here today, please don't forget to hit the like and subscribe button, bell notifications so that you're aware whenever we do drop new videos. Let's go ahead and get into what we talked about today in regards to this trade. So we did see quite a few things leading up into the New York lunch hour that were making us think short. All right. So we're going to take a look at all of these different variables, the things that gave us the clues in order for us to essentially catch the top. All right. Now, a lot of traders will sit here and tell you that you can never catch the top. The top is impossible to catch. The bottom is impossible to catch. But I think we've shown maybe 2 or 3 different examples of trades here on this channel where we caught the top. Okay. Now, the top is not hard to catch. It's really all about being patient and allowing price to finish a move. Okay. I call it finishing the play. Now, if price is moving, right, and we're just going to give a quick example of this. If price is moving in a way that seems aggressive, okay, you don't want to get in the way of that aggressive move. If candles are relatively small leading up into price action and then they just start to get a lot bigger, you want to allow price to finish the move. And what we mean by that is, usually what price will do is it'll reach for a low or a high, and you can see that here, okay? There's an even level of liquidity here, and price reached for it 2 times, okay? Once it broke those levels of liquidity, it started to rise. Now, this is the move, the objective that price had for the morning session in New York, okay? So when the day started off, it was kind of sideways, things went down, snatched that liquidity, pushed up higher. If you're thinking on a macro perspective, right, then you understand that any moves up are likely more like retracements. And when you reach the top side of around 40K, right, as historical price action shows, you start to get rejected by these areas. And so carrying all of this, the macro perspective, you know, if you zoom out to the 1 hour, it's a lot easier to see. Right now we're on the 5 minute, right? But if you zoom out to the 1 hour, it's very easy to see. 40K has been the ceiling for us when it comes to Bitcoin. When it comes to the bottom of this range, you're going to find that somewhere around the $36,000, $35,000 range, okay? So ultimately, what are we really looking for when price moves to the higher end of ranges if we're trading in a range, okay? Which we said we were probably going to trade in since January, because we understood that the Feds saying that they're going to raise the rates creates uncertainty in the market. Whenever you have an added level of uncertainty, then you will range and go sideways. So all of these notions, right, this does give us indications that Bitcoin is going to move sideways, okay? Now, this is just a 5-minute price action. Let's zoom out just a little bit more so we can get the full perspective here, all right? Now, if we look at this from a longer term perspective, this was the price action from last week, right? Last Monday, Tuesday, you had that really nice pump in price. Then price came right back down into this range. So What are we looking at? Longer term perspective, you have a ceiling here sitting at around 44 to 45. You also have a ceiling based on historical price action to the left here, right at around 40. All right, so these are the interior areas of your range. You have your highs here, you have your interior highs here, your interior lows are sitting somewhere around 37,000. You can see, just drag your cursor if you're on TradingView, line them up against these lows. These are your interior lows, your final area of liquidity where price may most likely go if you zoom out a little bit more, right? For the bottom, you're talking about 34, okay? Below that, you have levels like 30, 32 that we draw up on long-term charts because these are also areas of liquidity, of imbalance and price. If you zoom out, way out, you can see them, okay? Now, we all know that price goes for imbalance and liquidity. And if you don't understand what we're talking about yet, go back and watch a few videos. There's actually tutorials on imbalance and liquidity. You'll get the full picture on what we're looking for in price. But this is essentially all we wanted, right? We saw that price was creating highs around the 40K level, okay? It did it here, it did it here, it did it here, it did it back here. And so our intention is to catch when price reaches the top size of these ranges and of these levels, okay? You can trade this all day long, all right? You see it's pushing up there again. Now, do I think it's gonna break these levels? That's possible, right? Because you do have some bullish movement. Keep in mind, though, that this is the hours that Asia is opening up. So it's 9:23 p.m. currently, right? And we did have to kind of wait for this day to play out before we made the video, which is why we're posting it so late. But at the end of the day, right, when you're looking at this type of price action, what are we anticipating? Well, we know that New York likes to reverse in the afternoon. We understand this. They do it on a pretty regular basis, okay? The morning move is typically reversed in the afternoon. Okay, especially when you're trading in range-bound markets like we are right now. So as the price started to move up, you know, we started to rub our hands and lick our lips a little bit because that short started to become really, really, really tasty. Now let's zoom in to the 1 minute chart, because in order for you to get the real understanding of the play and what we were doing here, it's nice to look at it on the 1 minute. So our objective was that when price broke into this gray area, right, which we call area of sort of imbalance and liquidity. If you look over here to the left, you can see these candles here. Let me just kind of zoom these in a little bit, right? This area, even though it looks like they've retraced some of these moves here, this area on a longer term chart, 15-minute, 1 hour chart, is an area of imbalance, okay? So if you find an imbalance on a 1 hour chart, and you're able to zoom into the 1 minute chart, it's going to look like this, right? So just one candle on a 15-minute chart will print this. And when you look at this from higher time frame perspectives, it gives you an easier outlay to where things may turn around. Also understand that the higher time frames hold more weight. So if you can find an imbalance on a higher time frame and then equate that to the trade that you're taking on the lower time frame, that's what gives you all of the power that other people just really aren't paying attention to. So we're on the 1 minute chart, okay? We outline this area here as an area of imbalance. If we scroll to the right, we're gonna see you also have highs that are peaking into this area. Now, what are we really looking for? We wanna see these highs get broken. Why? Because when highs get broken, what are we grabbing? Liquidity. What is liquidity? Money. It's taking traders out of the trade. It's bringing in new traders to go the other way on them, to put them on the wrong side of the market. Anyone who was going short based on these up moves here, okay, they essentially could have caught plays and gotten out at the right time if they did. But if they didn't, their stop losses are here. Price goes to reach for that, okay? Takes it out, and then that allows the price to move lower. So not only did we have an area of imbalance, right along the same lines in price, you had areas of liquidity. So when price reaches for that, now we're ready to go short, okay? So as you can see, we were pretty aggressive with this play. As soon as price reached into it, we were just waiting for it. And then once we starting to lose a little bit of steam, right, we started to take shorts. Now, the first two shorts that we took, they went against us, right? They didn't necessarily go against us because we still managed to come out with wins on both of these trades here, right? Let me see, let's scroll up. So I think the first trade was for $10.65. The second one was for 45 cents, okay? Now, the reason why they're so low is because essentially once we set the short, okay, we were able to put the stop loss in front of where we entered. And the reason why we always do this is because you'll never lose a trade if you do it that way. The people who lose trades are the ones who set their stop losses way up here somewhere because they think that price will never go there and all it has to do is just fall for them to be in the money. But don't you understand that price is dynamic and it'll go down and then it'll come back up to greet you, okay? So never, ever, ever allow yourself to get ahead in a trade and then end up losing that trade. Right? That's not the rules we play by here. And anybody that watches this channel, I'm going to keep running this strategy by you so that you understand that all you have to do, if it doesn't work the first time, go in the second time. And that's essentially what happened. We went in twice on the same 1 minute candle. We're on the 1 minute chart. We got rejected the first time, right? No problem. Go in the second time. Second time got rejected again. No problem. What are we looking for? As long as price is peaking above this area of liquidity, we know it's also grabbing imbalance areas at the same time, liquidity at the same time. So these peaks here were all entries short that you could have taken. We luckily grabbed the last one as it peaked up above that imbalance and started to fall. So as soon as we got in, all right, the trade moved in our direction. Okay. We placed our stop loss here and we have the recording. So we're going to show you all of this stuff live in a second. We're just walking you guys through it. Okay. Price didn't come back, right? So at this point we were in the money. Price started moving down, moving down, moving down. And we were just watching it for some time. And once it started to bounce around here, we were looking to the left to see what the real objectives were. I was thinking that price could probably go for some of these areas down here. Ultimately, it didn't. So once it started to stall, we took some profit off right here, okay, 0.2. We entered with 0.3, took off 0.2, and then we moved our stop loss down a little bit, and price did take us out there. All right, so let's go through the trade live so that we can get a quick example of what I was seeing, what I was thinking, and, you know, these are no different examples of what we did today than what we've been preaching on this channel for the past 2 months. Right? And if we can show you example over and over and over again about how this works and how we're able to capitalize off this and how we're actually able to, you know, put up win streaks like this, guys. This is over 90%. This is one loss out of around 13 actual trades. I don't usually count the ones that just net, you know, less than $1. These little 60 cents and 45 cents trades, even though they're wins, I don't necessarily count them. Right? I want to count real numbers. And so this is the thing. If I have 13 trades that I've taken and I've lost one, does this prove anything to you guys? That what I'm talking about and the things that we're doing on this channel is real. This is TradingView demo account. All right. I wish I could show you guys some of the things that we can pull off on live accounts. But this right here is for demonstration's sake. So we're using a demo account. Right? And we're journaling everything that we're doing. So we entered the short off the liquidity imbalance confluence area, right? This is an area of confluence. Confluence means that you have multiple things aligning all at the same place. So what do we have here? We had imbalance, we had liquidity. We also had sort of a legacy top area, mid part of the larger range at 40K. Price tickled that area and went down. Same thing that it's been doing, all right? So when price shows you the characteristics, when price gives you the windows and the areas to enter into the trade, all you have to do is, you know, have enough guts to push that button. And that's what we did today. All right, so trade ended up pretty good. Of course, we wanted to see these lower areas here. We did have a take profit set right there for us to take some profits if price did drop down there as well. We're going to exit the full trade at that point because, of course, we know that price does want to bounce. We're stuck in a range, right? So let's take a look at this trade. We'll run it through so that you guys can get the idea of what we were actually doing, and then we'll come back and talk about some altcoins. Okay, so we entered a short here. Saw that price traded up through this previous area of imbalance that was created here. And now we're trying to see, just based on this topping pattern here, whether or not that was actually the top. So we entered the trade short. Currently, we moved our stop loss up just a little bit just in case price does turn around here. But it's moving pretty fast in our direction. So chances are this will be a sustained move more towards the downside to start to take out the imbalances here. Now we're on the 1 minute chart. So these candles are exaggerated a bit. We come out to the 5 minute. We can get a better idea of some things that we were looking at. But yeah, so this was the area of imbalance here. If you zoom out to the 15 minute, you can see it clearly. You also have some highs, areas of liquidity here. So the play was basically to see if price was going to jam up here, try to take some of this liquidity, but it just seems like it's filling this imbalance to try to come a little bit lower. So we'll see if this sustains, because there are a couple of areas here, right here, and a little bit lower here, right below this major area of imbalance that we're eyeing for taking profit. So let's see how this plays out. Okay, so it does seem that price did move in our favor here on this trade. So we are on the 5 minute. Let's take a look back at what we were eyeing here and why we were essentially able to catch this little top that we see in price. Okay, so looking back, right? Always look back, zoom out. You know, let's go to the 15-minute time frame here to put this in better perspective. All right, so we were seeing that Bitcoin was getting rejected from these highs here. Okay, so right around, let's say the $40,000 level is where Bitcoin is really seeing a lot of bearish activity. So I took a look at the order books. Things were looking relatively bearish right around these levels, and some pretty heavy orders were starting to get put on there. So we had some confidence that if price were to reach up here, chances are it's going to want to go short. So with that being said, surveying the 15 minute, we zoomed into the 5 minute, and this is what we were watching earlier in the morning in New York. Okay, so price kind of came down, set a low, and then it started to creep up. Now, as it was creeping up, we were looking into this area of imbalance that was created a while back. Okay, so from this first rejection from 40K, price pushed down, created this imbalance, right? This is the area that we were eyeing to see if price was actually going to reach back into it. And if it did, then we had a pretty good idea that if price reached here for this imbalance, there's areas of liquidity here above, right? And if it reached into that area, chances are we can go short from there with a pretty firm degree of confidence, okay? Because you're not only filling the imbalance, you're also taking out the areas of liquidity, all with this one big candle here, okay? Now, price did play around here for a bit, and we did try to enter in off of this candle, okay? And price didn't necessarily agree with us. It started to swing a little bit. It went down and went up, and it just kind of stayed in this range. But once we got the indication that price was really ready to start to break down, you know, zooming in on like the 1 minute chart, you can start to see this. All right, we see price sort of setting that even table, and price had already achieved what it wanted to on the higher time frame. So think about this, folks. We're looking at the 15-minute chart. Maybe you can even see this on the 1 hour chart, right? How price will push up, grab an area of liquidity on a higher time frame, which means that it isn't necessarily going to do it on the 1 minute chart, right? Most times what we say is that we want to wait for this spike of liquidity to come up and then boom, come down. But you don't need that on the 1 minute chart. If on the 1 hour, 2 hour, 15 minute, on a higher time frame chart, if that objective has already been achieved, then all you're waiting for is the breaking point, right? So we essentially chose this area here, and we said if price pushes up, we're going to enter in short again. And it did. Gave us a nice little green candle above the imbalance, sort of equal high to these here, and we just took it going short, okay? Now, this move is starting to play out pretty nicely in our favor, and what we were able to do is right after we entered that short, price started to move for us. So right away, we were able to take our stop loss, place it in front of our entry point so that we make sure we take something home. Price, I've seen remarkable things with Bitcoin price. Price could be on a downwards angle and then boom, just give you one really nice, beautiful green candle to spike through all of this, right? In a matter of minutes, if not seconds. And so what we do, once price moves in our favor, we protect ourselves. This market is volatile. It will move against you in a matter of minutes. And so this is all we do. Instead of placing our stop loss above these highs, okay, and waiting for price to come get that, because we know that price likes to search for liquidity, it'll come here eventually. So instead of us being the fools, right, we're going to be a little bit smarter than that to make sure we take something home on this trade, even if the price were to dramatically go against us. Let's say we walk away from the chart, okay, and we're at this level in price. Price could easily turn back around, right? These are areas of imbalance that could have gotten filled, and then price just reversed on you. But we knew that this had a lot more to go just based on the higher time frame spike of liquidity into an imbalance, right? So you're taking two areas out here, two areas of interest for price were hit. Just this price action alone here did it for us to push us into a lower area, okay? So being that price is moving in our favor, where are our targets, right? We want to start to look at where the other imbalances are, okay? Now, let's look here first. We can see that there are some areas here. So price is bouncing from these areas of imbalance, but you have sort of this spike low, spike low, spike low, okay? Now, what we're anticipating is, you see these even highs here? If price were to rally, it may spike these highs, come down, take the rest out here to the lower side. So we think that just based on the higher time frame move, this does have a little bit more to go, but you may start to see some retracements up into these areas of imbalance, even somewhat up here, right? That's not out of the question, especially going towards the afternoon session in New York, okay? So what we're anticipating, we're going to consolidate here for a little while, and these are 1 minute candles, right? So we're able to manage the trade very closely. We're going to consolidate here for a bit. Depending on where we spike, that means where we're going next, right? So if we spike this liquidity high, chances are we're going to keep going lower. If we set more even lows here, spike low, that chances are we're going to be moving higher, okay? So we're going to monitor this very closely to see what the final outcome is. Okay, so price is starting to come into the areas where we're starting to think about taking some profits here. So once we start to get into where this text right here is labeling off, pretty much the bottom of this imbalance is where we're looking to take some sort of profit. So price may start to try to retrace a bit, but you know, as we said before in the previous little section of this trade, when we were sort of in this area, if price were to break up, then we're expecting it to break down. It did break down, snatch these lows up, but it didn't react super strong from these levels. Let's see how this liquidity run takes place here. And if price is going to really launch itself from here, then we're looking a little bit more bullish, right? Might be a little bit more aggressive in taking that profit. Otherwise, if we don't really see an aggressive move up from this area of liquidity run, right? You see it spiked here, but there's not enough power, guys. This price wants to go lower, okay? So higher time frame entry point, right? On the 5 minute, we're able to ride this down with pretty good confidence. And we said that if price were to spike up and then come back down, then that's our key that things may start to go a bit shorter. All right, so seeing everything that we want to see in price right now. I was thinking that this retracement would have went a little bit higher, but apparently I don't think it really needed to. You're starting to get a lot of movement to the downside here. That gives us confidence to sort of just stay in this short. Now, we're either going to close this in one or two ways. If price does reach these lows before the end of the New York session, which is around 4:30, 5 o'clock, then we'll exit. If we reach the end of New York and we're not there yet, that may also be our exit. All right, so there's two considerations in regards to exiting, maybe time or the variable of price in these lows here, because we're thinking, you know, if price were to violate and come into these areas, there's a lot more liquidity for it to grab and then start to try to push up. Okay, so we're watching this intently. Let's see what the final result is. Okay, so we are starting to get to the point where we want to really think about taking some profits here. Price is angling its way down towards the end of the day. It's currently 4:50 Eastern Standard Time. So the New York session is for the most part closed. You did get a bit of a push towards the end of the day, but it seems to be a lot of bearish pressure, a lot of sell orders coming in here. You can tell by these wicks that are pushing price down. So we still do have a lot of confidence that price will eventually come and try to take these lows out here. Now, here's the conundrum that some traders are going to face. There will be times where you have to leave the charts. All right, so we're going to prepare ourselves for getting ready to leave the charts. Now, right now, our stop loss is here. And we really don't want price to come back and start to test these levels on us without us being around. So we're probably going to move that stop loss to a hair above this high. Now, the reason why we're putting it a hair above this high is because we don't really want to stop out here, right? But we're putting it here just in case. What we're also going to start thinking about is seriously taking some profit if price does sort of retrace back down here. So right now it's showing some strength, looking like it's sort of found a bottom, but it's wanting to bounce from this area, right? But in all reality, we really think that price wants to reach these lows. So we want to lock in some profit. We do want to take some things home. So what we're going to do now is close a portion of the trade, but let's see if it falls a little bit before we're able to do that. But again, we're up against a time variable, right? And sometimes when you're in a trade, you can't just let things run forever. You do want to exit off of basic variables. One of them is time. The second is levels in price, right? Or whatever your indicators or whatever it is you may be entering off of, right? You want to exit off of the same criteria, right? So our criteria here for the entry of this trade was based off of time. Price had rose in the morning. We're mostly bearish. We have reached other areas of highs that price has recently rejected, okay? So when we get up here, we're thinking price is filling this imbalance, taking this liquidity to the top side, it wants to reverse, and that it does. As it comes down, we're able to look at these order books and say, yes, this is where the pressure is actually coming from, okay? So we got in at the New York reversal, which is around 130. Now we're going to exit based off the New York close, okay? And the fact that we have things to do in real life, all right? So we're going to exit off of that New York close, but we're going to leave something here for where we would actually exit if, in fact, we were able to sit around and play in this trade, all right? So right now, being that I have to leave soon, I have another few minutes before I take something off of this trade, okay? And hopefully price is going to fall here as this is happening, right? Seems like I'm getting my wish. But if not, then at least I'm taking something home and I'm leaving something for price to continue to do its thing. Now, if price just kind of swings in these areas and it doesn't hit my take profit level, then by the time I get back from doing whatever I'm doing, then ultimately I can still play this trade out. If I want to take this take profit level off, I could. If I want to move it, I could. But for right now, this is the level that I'm eyeing, right? And you see it's a very nice and even level right at 38,100. So let's see how this goes, folks. Let's see how this goes. There's another few minutes, right? So this is pretty much my timer before 5 p.m. I want to see what's going to happen with price here. You know, let's go ahead and just close out some of this. We're going to do a partial close. And again, I'm going to take the majority of this trade. And the reason why is because I've made the majority of the move. Price has made the majority of the move, right? So we can take a partial close here. We locked in $160 on this move, okay? So nice play. Now we're just gonna let price do what it do. What we're gonna do is we're gonna take a trip to go do what we need to do. We're gonna run to the gym, and then we're gonna come back and see what's happening with this trade and where we are. All right, so see y'all soon. So it looks like price came back to get us. Sure did. We started to see this though before we left, which is why we took the profit here. I mean, at the end of the day, it was not a bad play at all. We did take home, what, let's see. Final outcome was $201.05. So now that brings our account up to $25,453. And we have one loss out of 1, 2, won't count that, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades. So one loss out of 13, that's well above 90%. So we're going to continue to push. Let's get to 50K. All right, so hopefully that was an example that gave you some insight, gave you a little bit of a deeper appreciation as to what traders think about, what traders go through when we're actually in trades, and the thought processes that we have. And I think that this is the real value that we can bring, right? Like actual examples, real live emotions about what traders go through on a daily basis. And hopefully that can help you just as a person who's viewing this stuff, that wants to get involved with crypto, wants to learn how to trade. You know, hopefully this stuff is a lot more valuable than guys just reading a bunch of articles. All right, so let's go ahead and dive into our analysis and then talk about some things on the charts that we seem to find interesting in a number of different ways. Now, what we're going to take a look at is Bitcoin futures and also a website called Look Into Bitcoin. They have a number of different charts that we like to review. Let's start with the Bitcoin futures because, as we all know, Bitcoin futures, you can tell the future if you know how to read it. So let's take a look at this chart here very quickly. And the thing that we always like to point out on Bitcoin futures is not necessarily the price action, right? We can talk about that in other places. It's more about the open interest, and it's more about the commitment of traders. So we gave an example of this yesterday, right, with the commitment of traders, and we'll zoom into it again so you guys can understand what we're looking at here. Anytime this green line crosses over the zero line there, which is just that center gray line, okay, then you're looking at bullish price action. Why? These are the larger institutions. These are the bigger investors that these guys talk about all of the time, right? That's when they seem to be coming into larger positions long, when they're over that zero line. Essentially, the red line are the commercials, the miners, the exchanges that have to serve up Bitcoin to the larger investor. And the reason why is because most times retail investors are not necessarily selling to the larger investors because they want to buy and hold. Most of the crypto audience, most of the crypto investors have a buy and hold mind state, not necessarily a trader's mind state, which is why if you, in fact, you do know how to trade this, you can get way ahead of whatever a hodler is doing, because hodlers have to hodl and wait. Traders can take advantage of the price action either way. But the way that we like to look at this from a longer term perspective is that if the larger speculators are climbing over that zero line, this does give us confidence in bullish price action. Now, lots of other things have to happen to confirm this, right? If they come over, you want them to stay over, because we can see this price action here, right? Came over that zero line. If you look up, it was a nice little fake out. But essentially all it was just to keep us in a range. And the way you want to look at this is, whenever this price action happens, it's whenever this little line jumps over the zero, it's not going to happen immediately, right? The price action reflecting that is not going to happen immediately. It's going to take a couple of weeks, right? But when it does, it's going to have a substantial effect in price, right? Now, there are also times where the larger speculators will push so far short that the commercials, right, in retail, they'll just be on the opposite end and you'll still get a pump in price, right? So if you're looking at this correctly, you're seeing that larger speculators were pretty wrong, right, over the months of September and October. And that may be why they're not necessarily so keen in jumping into a sort of a hedged position anytime in the future, right? Look at what happened to them. They lost. They were net short, but the price went up, okay? So institutions ate this, in my opinion, just reading these lines here, okay? So now they're thinking net long. And once they start to think net long and commercials swing net short and retail is sort of bearish, which most people are at this point, right? If you look at all of your different influencers on YouTube, anyone who talks about crypto, they'll share some bearish news with you because they feel like they have to at this point. We've been saying for the past 3 months, and we always keep a real perspective on this channel. We're not going to hype you. We're not going to fudge you. We're not going to FOMO you to death. We're going to keep it real, 100. We said that price may be in a range, and it's been in a range since January, okay? And part of why we said that was because of this tightening of these lines here. When price really moves, these lines expand, okay? They spread out, as you can see here, all right? And just look up, you're going to get that direct price action. Okay. But when they're very tight, price will swing in these condensed ranges, and we expect this to continue until the larger speculators really start to move the market. All right. When it comes to the elder ray, this is also something that we like to look at to gain sentiment. And for the most part, we're still in a bearish type market, right? You can tell by market cap, it's not really busting above that number of 1.89 like we like to see. And things just sort of seem gloomy, right? There's war. There's a lot of news in crypto right now, but a lot of people are worried about regulation. A lot of people are worried about the future of what crypto is going to be in the next 2 to 3 years. And it seems that a lot of what's happening right now is going to determine that. We'll see. Nobody really knows, but we'll see. All right. All you can do is look at the technicals. All you can do is, listen to the trusted news sources that you have. But don't use what the news says to make trading decisions. Use the charts. Use your your analysis in order to make your trade decisions, because on any given day, price can do anything. And all you want to do is catch the 2%, 3%, 4%, 5% move for the day. Get out. You don't necessarily have to hold things forever, which is why a lot of people are sort of in the red right now because they bought at the wrong time. All right. If we take a look at the money flow, right, also sort of just swinging sideways. There's no real direction of the market. You have double tops, you have double bottoms. What else are you looking for, guys? We're in a range. All right. Now, there are a couple of things that seem to be interesting as we look into the Bitcoin charts. If you take a look at the longer term 200-week moving average heat map, we sort of zoom this in some. We are anticipating that price is probably going to want to visit by some time this level here again, right? But this is a 200-week moving average, meaning that as long as Bitcoin will continue to push up, right, angle up, it doesn't have to launch up. As long as it's angling up, you're going to continue to see a rise in this moving average, and eventually it's going to come above the $22,000, $23,000, $24,000 level. Where I really think that this may be tested is somewhere around 30K again, okay? Now, if you look way back here, the last time that this line was touched was when Bitcoin was at 5,142, which was March of 2020, okay? Once it touched, it never really revisited it again. But if you know anything about moving averages, they act like rubber bands, and either the price is going to come to it or it will come to the price. So we're anticipating when this will touch, right? So how far in the future and how aggressive will this line climb before it touches? Because once it touches, then we are expecting for Bitcoin to have more of a rally point at that point, okay? Another thing that we like to look at is the Fear and Greed Index. And of course, we just use this for sentiment. How is the market thinking today? Most people are extremely fearful. Why? Because since this last rally here, these two pushes in price, okay, now this was the October-November push, and this right here was the push sort of in April, right? Now, here's the thing. When price falls and then pushes up again, this gives people confidence that they want to get in, right? So it's everyone up here that bought somewhere around 50K, 44K, right, and above that are fearful at the moment. These are the people who have negative accounts in Bitcoin. They don't want to see it go to 30K, because once they see it go to 30K, some people will be down half of their value that bought here at 63K, right? So just imagine losing half of your portfolio. This is why the market is extremely fearful. But if you really look at it from a longer term perspective, the market has not done anything other than range between lower levels of around 30K to the higher levels of around 69, 65. You got to zoom out sometimes, folks. And if you're able to play these ranges, okay, literally, what do you think you would make if you put a nice trade in somewhere around 31K and Bitcoin jumped up to 60K again? Would you take profits at those levels? Disciplined traders always do. And that's why they never really worry about things like extreme fear in the market, because they know where they want to buy, right? There was a report today. Institutions are buying around 34, 35,000. Yeah, we called these levels out since January, okay? It's easy to see them, guys, if you know what you're looking for. All right, the Pure multiple is another one that we like to look at, and this is one that's starting to creep more towards the area where we see that Bitcoin could launch from, okay? So last time that the Pure multiple was down into these green areas, all right, you did have quite a few bounces, right? So this was March 20th, March of 2020, 5,132, right? Right around the same time that the price was touching that 200-week moving average. So we're looking for confluences here, right? We're going to watch these charts, see if we start to have some confluences in them. And once we do, then we can start to get really bullish on the Bitcoin price. Things may not happen right away, but all of the ducks are aligning, if you get what I'm saying, right? Another drop here, you see price sort of meandered around, but then ended up taking off, right? Dip here, did have a lull in price. This was June of 2021, right? When Bitcoin hit that 31,000, and then boom, it just kind of took off from there, right? Now you're starting to creep back into this green area. And essentially all this shows us, right? This Pure multiple, it just shows us when the miners have the best time to sell their coins, which is usually up here, and the best time to hold on to their coins, which is usually down here. Now, when miners and institutions are holding, that puts a lot of positive price action on the price, which is why you're going to get those pumps. Last but not least, you're going to look at the 2-year MA multiplier, and this is another one that is starting to creep down towards the lower levels of price. Now, if you take this on a historical level and you zoom all the way out on this, for the most part, when price does break below this, it does make a really good aggressive push to come back within the standard deviation. So how far will price break down? Right now, that lower level is at 32, right? All of this information gives me some fairly good confidence to say, if Bitcoin were to break itself down to maybe 30K, even maybe 28K, that would be the bottom, because there's a lot of legacy information telling me so. The charts are telling me so, okay? The only thing that's not telling me so is the uncertainty in the market, all right? If the war escalates, things get worse, right? The economy right now is sort of playing a balancing act between a lot of different things. Oil is up, it may go down, equities are up and down, S&P fell today. There's a lot of different correlations that are seeming to break right now because of all of this uncertainty. So once the market kind of clears itself of that, you will start to have a better outlook on some of these things as we move into more greener pastures, which is what we think should start to happen soon. All right, so let's take a look at the total crypto market cap. Let's zoom this out to the daily. Let's get a real perspective of what's actually happening in the market. And I think everyone who tunes into this channel gets an idea of the way that we view this, right? You have strong areas, you have weak areas when it comes to market cap. And as long as you're under $1.876 trillion in the market is considered weak in our opinion, right? You're not getting a lot of very good aggressive pushes and price action. And as long as we're swinging in this range in market cap, you're going to have the up and down days, the good Monday, Tuesday, Wednesdays, and then crashes on Thursday and Friday. You'll never know how to feel about Bitcoin, all right? As long as we're playing around this line. Once we break above or below, right, you'll get a bit more definition in price action. But right now, this range is killing a lot of people because they don't really know which way the price is going to break out. All right. If we take a look at Bitcoin, we can see that price is just sort of sitting right on this dividing line here. All right. Now, if you're not aware of how we break this all out, there's a pretty good tutorial that we're getting ready to drop. We're down to sort of our last phases of putting it together. Just need to give it a nice run through, make sure the script and everything is together. And then we're going to go ahead and drop this. And you'll have the full process to put all of this information on your charts if you like. All right. From discount to bargain, low premium, high premium, right? So, delineating zones on your chart where there's opportune buy areas versus opportune sell areas, right? And this is just all the concept of buying low, selling high. This is what we're outlining here. But we take it a step deeper when we get into scaling in, scaling out zones, because as we all know, the quickest way for you to get wrecked in this market is to drop your bag on something. Quickest way to get wrecked. So we always recommend scaling in just a little bit, scaling out just a little bit. As price moves in your favor, you want to take profits, guys. That's what trading is all about, right? It's not, and in crypto, I think we're guilty of this, right? We take so much pride in the things that we hold that we forget the objective of the game. Warren Buffett is not in love with any stock that he bought. He understands the objective. Can I just be real with y'all for a second? Warren Buffett does not go to sleep at night dreaming about any stock that he bought, because Warren Buffett understands the ultimate objective. The ultimate objective is to find things of value and hold them until that value proves itself. But it doesn't matter what that thing is. So we fall in love with our coins. We fall in love with what we like and what we want to see grow and expand and et cetera, but we forget the objective, which is to take home something, right? You can hold your coins. Nobody is against holding. What we're saying is that understand what you're holding for. What is your objective at the end of the day? Are you just holding it to hold? Are you holding for bragging rights? Or are you holding to essentially flip that investment one day, right? Hopefully it's the latter. And you're not just going to be sitting there holding the bag if the price falls. Scaling in, scaling out, these are the areas where, you know, you can take advantage of the market, take something home, still achieve your objective of holding, but now at least you have something to speak for, right? So when it comes to Bitcoin, what are these levels? 34, 32. This is where we're looking to get in, okay? Right here, pretty even. Even at 32, 9, 17, you could say 33, okay? Below that, we have around 31,000, and then 30,000 seems to be our dividing line where we'll start to look into some of these longer term legacy charts to see if in fact we are finding confluences with where the bottom was found before. All right, so we have a pretty strategic approach on how we're going to scale in. We're not just saying draw these lines here at the bottom and scale in. No, there's a whole process to this, guys, right? And the tutorial is going to show you guys exactly how we line this up. All right, so let's take a look at a few different altcoins here. As you can see, Bitcoin scaling in at around 34, getting out at around 45. These are the levels that seem to be proving themselves out pretty substantially to us right now. And we're still following very simple rules, same rules that we followed on, you know, the 1 minute chart. You can follow on the daily chart if you know what you're looking for. Areas of imbalance right there. Price will come, fill those areas, turn around. Fill the area, turn around, okay? If you look to the left here, every area or big candle of imbalance that's created eventually gets filled. Once price does this enough, it has the right to break out of that area. It's essentially retraced in this area, right? If you go back, this is the area that Bitcoin likes to sit in, all right? Anywhere from 45 to around 30K. This is the area for Bitcoin, right? Until you have the next halving event, you may just sit around in these areas, bounce up to 60, come down to 40, drop to 30, move to 50, jump to 60, jump down back to 40. Who's to say price won't do that, right? Just because we don't have that scarcity scare out in the market where people are really, you know, people talk about it all the time. Oh, Bitcoin is so scarce, but anybody right now can go on any exchange, for the most part, any retail trader can go and buy Bitcoin on any exchange they want right now. They're not having a hard time getting their hands on it, guys. All right, so I think that narrative needs to change a bit because that is sort of pushing people into the market, and then the price drops and they're wondering why people are selling Bitcoin if everybody wants to get their hands on such a scarce asset, right? The narratives, I think, that we tell in this market sometimes gets people wrecked. All right, let's cover a few more and then we'll get up out of here. So Ethereum, same premise, scaling in, scaling out, hitting areas where we like to see price go, right around 25, 24. And what do we say here, guys? If price were to spike into scale in areas, right, which it did right here, and this was on February 24th, right? Look at the first place that it went. Scale out zone, area of imbalance, filled. Once it touched, it turned around again, went right back to the discount zone, okay? We said excellent area to buy. Look at what happens. Bounces in this area, moves up. How hard is that, guys? It's not very hard for you to just lay out a couple of areas in price that we're going to show you how to find and take advantage of it, right? Terra Luna is one that's probably the most impressive to me. And I'm just actually waiting for this to break out of this zone so that we can draw brand new premium zones and discount zones for this, because Luna just seems to be taking over a lot of different ways right now. Okay, and we were talking about Luna weeks ago. We said, look at this price action. It came from the bargain zone, jumped into a discount zone, and then launched itself completely from here into the high premium zone, right? Came down, touched the discount zone again, just tickled it, pow, see you later. This is the type of price action that makes you say, this has a lot of power to it. So when you see price come into this discount zone, which it did for the last time, on January 31st, okay, around the time where we started drawing these lines out, and you can go back in videos and look, all right, scale out zone hit, came back down to a discount zone, pow, high premium zone, okay, and look at where it bounces between the areas of the scale out. How sweet is it for you to get in here, take some profit, but not all of it, and just let this rest ride for you while you have dry powder to invest in new things. If this were to drop again to the discount zone, that dry powder can be used to get back in to Luna. There's so many different ways that you can play this strategy. It's ridiculous, guys. It's ridiculous. Let's look at AVAX. Again, another one. Scale in, scale out, okay? As long as your price is moving from this discount zone to this low premium zone, you are in the money, okay? These are not small moves. They may look like it on this chart, but if we take a ruler here and draw from, let's say, one of these candles to one of these candles, we're not even going from the top to bottom. You're talking about 42% from a discount to a low premium zone. It doesn't get any easier than this once you're able to draw this out on a chart. All right, let's just scroll down, find a random one. Harmony 1. All right, now Harmony 1 has not shown us or exhibited the type of price action that we thought we would see from it. Right, so this is one that our analysis was a bit wrong, but it doesn't mean that these discount zones won't be honored. As you can see, you don't break down into these bargain zones, and it seems like you're just accumulating here. And the reason why we think Harmony 1 is good and does have some power is because just like Luna, it busts out of these bargain zones, right? You go from a bargain to a low premium. You go from a bargain to a high premium. Near the top, just setting the all-time high from very low levels, right? So if something's going to break out of here from this discount zone, Harmony 1 definitely has the power to do so. It's trading right now at around 13 cents, okay? So you take something from around 13 cents even to the low premium zone. You grab this ruler again. Let's just do a nice little measurement. You're talking about 77%, guys. Going from the low area of a discount zone to the low area of a low premium zone. These are not things to take lightly that we're showing you, right? These are things that can definitely net you brand new profits on pretty much a monthly basis if you know what you're doing, okay? Once again, discount zone, low premium zone. Doesn't look like a lot of price action here. And look, Mana is starting to show itself as a real asset with market cap, because we said that in previous videos, this area of imbalance, right, is something that Mana may want to come down to. It came here, now it bounced, right? Now, will it come and fill the rest of it? There's a good chance that it will, but if Mana were to drop down into a bargain zone, I think it's a good buy still anywhere under $1.53, okay? But again, taking our ruler to prove this to you guys. From a discount zone, let's just come here right from the middle, the low premium zone, you're talking about 60%, okay? So these moves are not light. They just take a lot of time to play out, and you have to be disciplined in just buying down here, selling up here, and not worrying about what the media and everybody else is saying, right? Let's just take one more example, CRV. This is one that we like. Again, not necessarily breaking out of this zone super aggressively, but it seems to get supported here, right? It comes from the bargain zones into the discount zones, into the low premium zones. And that's the price action that you want to see. Not everything is going to move the same. Not everything is going to move at the same time, right? But you can see from a scale in zone, you are able to hit scale out zones. Now, price is not doing exactly what we want to for CRV, but I think that the larger crypto market as a whole has been down. You do have a couple of winners, and you know, for the most part, the ones with the higher market caps are the ones that are exhibiting the moves that we're seeing with Luna, where you go from a scale out to a scale, from a scale in to a scale out very aggressively, or even something like Bitcoin, where you just sort of ping in this range, right? Higher market caps, these things seem to get honored a lot more than things with lower market caps, okay? So that's our analysis. And again, we are still putting together this tutorial. And this tutorial, it probably should be out. I think we're gonna drop the first video this week. It's probably about a 5 or 6 part video series, guys, because we don't want to jam everything into an hour or a half hour. There's just too much that we have to show you guys in this tutorial that it's gonna take, you know, sessions for us to get you to the place where you're able to trade this effectively, all right, with no emotion, with a firm understanding of what you're doing, where you can go on any one of these charts, draw this out for yourself, have an understanding of what you're looking at, automate the system if you want to, and kind of just sit back and let the market work for you. If you don't know who I am, my name is Maestro. This is The Long and Short. If you like what you saw today, if you learned something today, please go ahead and hit that like, subscribe, bell notification. Let us know you're here. Write something in the comments. Say good job, say terrible job. Let us know. We do want to know, okay? We want to know how you guys feel about the content that we're sharing. And again, let us know how you feel about this. Because if you think it's fake, we can do a live example. We can go on YouTube live and trade. It doesn't really matter, guys. We're here to show you the sauce that we found that we're able to take and just win with, all right? So salute. Everybody take care. Hope you're safe. Hope your family's doing well. And hopefully the weather's getting warmer around where you are as well. All right. So Salute, man. We out of here. Time to get back to the markets. Your boy Maestro.